What's going on, everybody? It's Jeff here. Welcome back to the channel. Okay, so the markets reacted surprisingly well. Even though the inflation report was slightly higher, I was taking a look through the Fed minutes, reading exactly what they were talking about and getting a sentiment of where their outlook is. And I want to talk about that in this video, especially because we are now in Q4 ahead of a heavily buying holiday season. And if these companies continue to see and struggle with the issues that they have, you can expect some of these stocks to be heavily hit. So let's get right into it. First off, I want to take a look at the numbers. It was 5.4%. The month prior was 5.3%. Investors are still sitting on the edge of their seat, but confident that inflation is going to be transitory as of right now. If you look at a couple sectors that were hit heavily, and I'm sure you all see this at the pump, the energy sector right here, and as well as used cars and trucks. General Motors actually released a statement a few months ago saying that they were renting abandoned parking garages and parking lots and storing their partially built vehicles, waiting for their parts to come in overseas, and actually having a labor shortage to be able to install those parts. So there's been a bit of a backup here. And if you drive around and you look at some of your dealerships, you can see that their lots are far emptier than they were previously. But this is even more important than inflation, in my opinion. And I'm going to go over this, and it was talking about the jobs report. If you remember, we talked about this a little while ago, just last week as it was released. The fact that their expectations were 500,000 new jobs added, but there was only 194,000 jobs were added. That's actually a 60% failure rate. The fact that people are not going back to work. Well, here's another article that I just read, and it talks about a record 4.3 million people quit their jobs in August, evidence of the considerable leverage workers have in today's economy. And you can see anywhere, this is an employee's world. Just like they say it's a seller's market in the real estate, this is an employee's world right now. Everywhere you go, employers are looking for help. And it really just rang a bell to me, thinking to myself that the end of August, the beginning of September was when unemployment benefits officially ran out, and you have a record number of people quitting their job. So what's going to happen that the supply chain is already struggling? You're not being able to get supplies because of actual physical property shortages, but then as well as the fact of the manufacturing and the manpower it takes to create some of these commodities. You're having issues as well. What's going to happen now that we are in Q4? Now that Christmas is coming around, the holiday season, buying picks up. This is some of the a lot of companies' biggest quarter, and you've already seen Apple cut their expectations because they're not going to be able to produce this many phones. And it's not just an actual parts, but it's the manpower to be able to sell these, to be able to ship these. Think about the shipping industry. Everything goes by trucks. So seeing these issues of inflation running higher, you're having the supply shortage when it comes to, like the physical aspect of the product side, and then as the manpower to be able to sell these products, deliver these products, and produce these products is kind of leveling up for a recipe for a much bigger disaster going forward. And when you start to see some of these big companies that have already ran up these high valuations start to cut back some of their numbers, you can expect to see these stocks to really get cut going forward. So keep that in mind over the next few months. And like I said, especially because of the quarter that we are in right now. One last thing I will talk about before getting into a few plays today is the Fed officials said that they're going to start tapering in mid-November or mid-December. They're saying that the rise in COVID rates could actually slow this down. However, from everybody else that I read from, I hear about, and the information that I'm reading myself that is portrayed over the internet, it's COVID rates are actually coming down, and that we're not seeing that huge flare up that we did just a couple months ago. So I'm gonna kind of really weigh in exactly if this mid-November and mid-December tapering is actually going to happen, because if you continue to have a low labor market and the economy is not fully recovering and growing as fast as they wanted to, they're not going to be able to do this, or else the stock market and the economy is really just going to fall off a cliff even quicker. So keep that in mind going forward. I will go over just a quick couple plays today. The first one, let me just talk about AMC, because I know everybody is waiting for this. What did I say? That 36 to 38. I mean, 36.12 bounce off of. You saw we bounced off it yesterday. Strong support and still resistance at $38. You switch over to the daily chart, and we have not seen consolidation like this in quite some time. We might have seen a little bit of consolidation up here in the 50s and 60s, but there was much wider spreads, and this is just getting tighter and tighter, bouncing between the 50 and 100 moving average. It would be good to really see a breakout, a strong breakout above 38 and get back into the $40 levels going forward. Now, the best play that we had today was Jasper Therapeutics. They came out with a pretty big price target, and it was rising pre-market. It was all over the pre-market scanners. Call this out. I think I said a rip above 1050 would be good for more to go long. It was a $21 price target. I underestimated the power of this stock, and I said it to everyone inside the group. It ran, almost 100% intraday. If you look at right here, it curled around the $9 mark, almost intraday, 100%. I said it was going to go up $1.50 or more. I didn't think it was going to run nearly this hard. Grom Social ran today as well, just because of the DATS sentiment, even though DATS actually heavily got hit. And so did Pal Talk. It ran at and the market opened off of DATS sentiment, getting some good gains on that one. Now, lastly, let me mention this one, and I said this in the video yesterday, or maybe it was the day before, when we were talking about another stock. I think it was like PTGX. The reason why it ran is because it was off a FDA clinical hold. And I talked about Allo, and I said that this was a potential to add anywhere around the $13 range. I must have said it either yesterday or the day prior, saying that as soon as there is an FDA clinical hold, and I said that there was only one single patient case of this, it would be good ads. It already ran 20% today. It's levels back at that $25 level. I don't think it will get there unless new analysts come out and they give it a higher price target, unless the FDA releases that clinical hold. But like I said, when you see stocks like this heavily beaten down, sitting at a solid support like we have it now, it's great to be able to take a starter position. Look in here, look at any break of support. You see a couple dips right down here. It's actually not even really below 13. You get in at 13.30. Keep your stops at 12.80 in case it tends to turn down. It's a 50-cent stop loss. But these are phenomenal plays. Love to get them when they're beaten down, especially when the companies are actually solid companies. They're not just quick pumps, and dumps and so forth. So just want to point that out to you. Guys, that's it for this video. I'll see you in the next one.